This is the third video in the series, and I'm also doing this on November 21st, 2023. This is the chart that I was on when I finished the prior video, and it's still the 21st. You can see at 12:06 p.m. This is the intraday information on NVIDIA. You can see that it's down for the day right over here. That information's over here. So we have a red candle, and this is the projected volume. The magenta portion of this bar is the projected volume today, and it's earnings day today, so there's going to be a lot of volume, and that happens after the market. But I'm just concentrating on the charts, the relative strength, the industry group movement and strength, and the VPA signals themselves. Or at least that's what I've done up to this point so far. Now I'm going to drop down to another chart. I call this my context chart, chart number 2. And what it contains is information about the pricing chart, as the other charts did. This is the industry group alone. You can see the industry's turning down a little bit today. Same chart of NVIDIA, but I've added my moving averages to this chart. And the moving averages are, I'll bring the arrow up here. Okay, this is the 200. The red, gray is 100. Cyan, not magenta, is 50, and yellow is 18, and red is 6, and green is 3. Now I use these moving averages to get a feel for where a stock is. Now, when a stock like NVIDIA is moving up and these moving averages are spread apart and are stacked on top of one another, with the 18 above the 50, and both are above the 100, and the 3 are above the 200, that's what I call a fan uptrend. Now just reverse it for a fan downtrend. You can see that here these moving averages were spread further apart on this gap up. It just shows that the stock is in a long-term uptrend. Yes, there are fluctuations, but the trend is up, but that trend has been losing momentum because, as you can see, these moving averages have come together, these 4 moving averages. Compare this to this. So it's been consolidating. What this is doing in Wyckoff terms is building a cause. Now, we don't know if this cause is going to project this stock up or down, but this area here is the cause. Let's see if I can draw a box around this. I'm going to take a clear back here from the gap up to resistance here. So this is a cause. And what the effect will be, we don't know yet. But this is probably a really good example of building a cause, because it's bouncing back. I'll draw this again. It's bouncing back and forth between support and resistance. Here's another box inside here. And it's not going to sit here forever. It's going to go one way or the other. After earnings today, we'll probably have a better feel for it. Another thing about these moving averages, it's easy to see when there's expansion, because these are starting to expand apart, and the 3 is above the 6, and it's moving up. So that's expansion, and this is contraction here. The moving averages are moving down. The 3 cross down below the 6, and these moving averages are coming together. Now let's work our way down the page here. These are what I call volume pocket pivots. The blue means that the up volume is greater than any down volume over the past 5 or 10 days. and the magenta or pink means that the down volume is greater than any up volume over the past 5 or 10 days. And we haven't seen any blue bars for a while on this. We've seen more magenta or pink rather than blue. So what does this mean? It means that during this time period here, well, this has been moving up. You can see that the volume has not been moving up with it. The volume on this one, I think that's the hammer, has been falling. And then on this bar right here, that probably corresponds with this candle up here. It does. So on that day, even though it looks like the stock moved up, there was some heavy volume or a little bit of distribution. Does that tell us that some of the big traders were taking profits? It could be. And we could see the same thing here on this bar. It wasn't quite above the 90 period moving average, but it is red. These bars, these volume bars, are based upon open to close. So if the closing price is lower than the opening price, these bars are going to be red. If the closing price is greater than the opening price, these are going to be, or they are, green. Just a nice, easy way to figure out if the open and close are corresponding with the volume. Now, Anna says in her book that volume always has to agree with price. I don't find that to be necessarily true. In fact, if you read Jesse Livermore's books, he says that price can go up on low volume if there's more demand than supply. The demand is just not so obvious. But if these bars continue to close near their high, like I said earlier, it just means that the buying was absorbed, or the selling was absorbed by buyers, and as the volume was going down. So like I said, I don't necessarily agree with her assessment on that. But generally what she states is true. The more demand there is based upon volume, it is more than likely to show up in widespread candles. Okay, let's move on down to the next window. This is a histogram of the 3 crossing the 6. If the 3 is above the 6, it's going to be green. If it's below, it's going to be red. And these are what I call crossover days. Now, these are used in conjunction with the warehouse views and the filters to locate stocks that are crossing over. So in this example, if a trader missed this hammer, he would be alerted on this day, I'll put the crosshair on, by the 3-day crossing the 6th, and that shows up here, down here in the histogram. So it doesn't catch the bottom, but it catches the 3 crossing the 6 at this point. I'm going to go down to a different chart, my 2C, which puts the 3-6 window above, and you can see that it actually caught it on the screen on this day right here, a day earlier than what I thought. So if that is in place, you can see that it's catching it near the bottom. This is how I scan and screen for stocks, based upon the 3 and the 6 in addition to the VPA. So they're working together. I can go down to the next view. I'm going to go back up to number 2, which is my standard chart. Okay, this is the 3 crossing the 6. This is the 6 crossing the 18. You can see that's later, right up here. And then the 18 crossing the 50 doesn't happen until here. So the trigger is the 3 crossing the 6, but even before that happens, if you look down at this window down here, this is the volume point of control based upon 10 days, 10 buckets. That, and I'll explain that in a minute, that is the earliest warning. It's a very jumpy indicator, as you can see, but it tells me that the bulls are regaining control on the same day as that small nub, that crossover. So the bulls are regaining control. These are the triggers I use. I use the 3 and the 6, both up and down, and the volume point of control. A lot of times stocks will show up on the volume point of control a day before they show up on the 3 crossing the 6. Now I'm going to drop down here, and I'm going to look at the volume point of control, and I'll look at the number 2 chart. What this chart shows, I'll move in on this. This brown line here represents when the volume point of control goes from negative, if you look down at the bottom, to positive. So what happens on this turnaround here, here's the hammer, and the volume increased considerably on these 2 days. And when the volume increases dramatically, all that volume is assigned to the buckets that it crosses over. So let's see if I can move this back here. So on that, move back all the way to that day. Get this out of the way. Go back one more. If I can control the mouse, that is. Okay, on this day, the bulls were not in control yet, because all of this down volume was being assigned to these buckets. These are called buckets. So every line that it crosses, the volume is assigned to that. But with this volume spike here and this closing across multiple buckets here, all of that was added to the upside. And then this followed through. There wasn't enough here to get above the brown line, which is also right here, the horizontal line. But with the addition of all of this volume on that day, the two combined pushed it above here, and this assigns all the volume to these buckets. So notice how the green is expanding here because all the positive volume is assigned to these, and as it goes up, there is no volume assigned beyond this. Okay, now this is 10 days right here. We're looking at 10 days. So there was still some residual volume over the past 10 days in this bar right here. If you look out here, it's right there, crossing right there. So that's, as these get smaller, these will get smaller because this down volume really is not in play anymore. It's overwhelmed by the up volume. It's a little confusing, but all you need to know is that when this turns green, at that point the bulls are in control. Whereas when it turns, the bulls were in control on these 2 days. Here, the bears regain control for a few days, and then back when we get over here to this, the bulls retain control again, or take over, and the stock is not really looked back, as you can see. I'm going to go back a couple clicks. Okay, so this is all bullish because it's been going up, and as it crosses these buckets, or these buckets are created as it continues to go up. Now, this is yesterday. I think I went a little bit too far here. On this day, it was all green until this day, and notice that these red or magenta, rose, whatever you want to call them, they appear. Why? Because this candle right here, it closed down for the day, so all the volume is assigned to these 3 buckets, and it goes all the way down to the wick, the bottom of the candle. So that's why we see these appear, the rose-colored bars, because all this volume for this day, even though it didn't close there, it touched them. So that's being assigned to the downside. And as we move along, all this volume on this day would be assigned to the upside. This is a down day, so this would be assigned to the downside, so it goes into this bucket. And then on this day, this up volume is assigned to the positive portions of the bucket. And now today, because this is touching this bucket and this bucket and this bucket, that is added to this portion of the bars. Like I said, it can be a little confusing, but just look down here. If it's solid green, you know the bulls are in control. But if you put this on here, you can put this chart up, and you want to look at the buckets, you can see there is some indecision here because the red bars are expanding, or the rose bars are expanding. Now all of this is documented in the help file if you want more clarity on it, but I just generally look down here and see which is the dominant group, the bulls or the bears at this point. So I'm going to make this full screen. I'm going to go back up, and I'll go to my number 2. So all the information I really need about the condition of a stock, or the direction, where it is relative to the moving averages, if the bulls or the bears are in control, it's really all in this chart. This is my favorite chart, but I use these other charts too because this eliminates the noise except for the support and resistance lines, and those can be turned off by editing in the editor and going in here, just selecting invisible. And then I have a clean picture of the stock without any distractions. And then when I want more information, here's the end of day. Here's the intraday. Here is the intraday with the S&P 500 relative strength compared to the stock, and the group itself. Group is down a little bit today, but this stock is outperforming the group, NVIDIA, because this green line is up. So even though it's down a little bit, it's outperforming other stocks in the group. The market's down today, by the way, but it's coming back. And then finally, I go down to this chart here, and all the information I need is there. Now there are white versions of most of these charts above in number 3. I prefer to use the black charts. Okay, that's it for this video. We'll build upon this when we get into the warehouse, and I'll show you how the warehouse is, well, it gives us all this information, or most information, in warehouse form, which translates to this chart.